everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and today's contract tip has to do with one paragraph, actually two paragraphs, on the GAR, Georgia Association of Realtors, Financing Contingency Exhibits. There seems to be some confusion regarding the section where the buyer identifies an approved mortgage lender. So I just want to go over that with you and give you a couple of points of practice depending on if you are representing a buyer in a transaction or a seller in a transaction. So in the GAR loan contingency exhibits, and this is in all of them, the VA, conventional VA and FHA, you will see that it states in paragraph 2, use of particular mortgage lender. It says, unless an approved mortgage lender is identified below, buyer may apply for approval of the loan with any institutional mortgage lender licensed to do business in Georgia. If an approved mortgage lender is identified below, the buyer shall apply for approval of the loan with at least one of the approved mortgage lenders that are identified below. Nothing herein shall require the buyer to obtain mortgage financing from an approved mortgage lender. And then it has a place to identify the name or more than one name of the approved mortgage lender. So that paragraph in and of itself just states, just the whole financing contingency exhibit, and I think I've done a video on this before, has nothing to do, well, not nothing, but it is not required that the buyer pursue their financing based on the terms of the financing contingency exhibit or from the identified approval mortgage lender. That document is for the protection of the buyer, or more specifically, the protection of the buyer's earnest money should the buyer terminate based on not meeting the financing contingency exhibit. But that's a whole nother video. I just want to talk about the approved mortgage lender for this one. So basically it says that you identify an approved, one or more approved mortgage lender. All that means is it doesn't mean the buyer has to get their loan from that person. It just states that if an approved mortgage lender is identified below, the buyer shall apply for approval with at least that person. So, now, the other part of the financing contingency exhibit is paragraph 6, use of approved mortgage lender and the loan denial letter. If a buyer has agreed to apply for the loan with an approved mortgage lender, meaning the one that was identified in the previous paragraph that I just mentioned, then the loan denial letter must be from an approved mortgage lender. If the buyer is not required to apply for the loan with an approved mortgage lender, the loan denial letter may be from any institutional mortgage lender licensed to do business in Georgia. A loan denial letter from a non-institutional mortgage lender shall not be the basis for the buyer to terminate this agreement. So let's talk about what that means a little bit. Again, when a buyer identifies an approved mortgage lender, and that is a point of negotiation between a buyer and a seller. If a buyer identifies one, then they must apply for their loan, the loan that's identified in that exhibit, with at least that mortgage lender in addition to others. And if a buyer is going to terminate the contract based on the financing contingency exhibit, the loan denial letter must match the terms as outlined in the financing, and that loan denial letter must be from one of the mortgage lenders identified on the previous page. If the buyer and the seller negotiate that the seller doesn't require the buyer to identify an approved mortgage lender, then they can use a loan denial letter from any institutional mortgage that's licensed to do business in the state of Georgia. So what does this mean in practice for you as an agent working on behalf of your buyer and your seller? Well, if you're working with a buyer, on one hand, you might consider that it would be in a buyer's best interest to not identify a mortgage lender. If that would be the case, then if the buyer does loan shopping or mortgage shopping or lender shopping and gets denied from the loan, then you can get a loan denial letter from any mortgage lender that with whom the buyer has spoken. However, if you are working with a buyer and the buyer has come to you as their agent and they are already working with a mortgage lender that you are not professionally comfortable with, or I'm trying to think of how to say this. You want to work in your buyer's best interest. So, you know, in this market right now, there are some lenders with whom you can easily communicate with, find out what's going on to help the buyer pursue their loan and do what they need to do. There are other mortgage lenders in our industry right now where communication is very difficult, and getting a loan denial letter can be extremely difficult to protect the buyer should they have to terminate under this contingency. So if you are working with a buyer's agent, on one hand, yes, you might consider not to put anybody in there, not to identify an approved mortgage lender. On the other hand, if your buyer comes with their own lender, for example, or with a lender that you might have difficulty speaking with, someone they have seen advertised on the internet or on TV, or one of those lenders with whom you believe that communication is going to be difficult with in order to facilitate the transaction or the documentation that you will need to protect your buyer, then you might want to inform the buyer, obviously you can apply for the loan with this person that you're comfortable with, or that you have gotten a referral to, or however you brought that buyer about or heard about on TV or the radio or whatever. But also, here is a mortgage lender with whom I am very comfortable with, and my past clients have had really good transactions with this mortgage lender. And you might want to put down a mortgage lender with whom, at least one or more, with whom you have had a good working relationship with, and your past clients have. Now, if you are on the seller side, then again, if you receive an offer and there is no identified approved mortgage lender, you need to have a discussion with the seller whether you want to accept that as it is, or whether you want to counter putting in an approved mortgage lender that is a mortgage lender with whom the listing agent's clients have been comfortable with. So that, again, this all has to do with the buyer is not obligated by any means to pursue their loan with that person. It all has to do with termination of a contract based on the financing contingency exhibit, or financing contingency. So if you're a listing agent and there's no identified approved lender, you might want to have a discussion with the seller about countering back, identifying one or more lenders with whom your past clients or current clients are comfortable with whom you have had, you know that a loan denial letter really would be a loan denial letter, and that lender really has checked out that buyer's qualification, rather than that buyer just trying to terminate the contract without that lender having looked at anything. Or also, for the betterment of the buyer, the lender, if you have a listing, if you're representing a seller and the listing might have some particulars where the lending on it might be a bit of a challenge or a bit complicated, or have some specific issues that need to be addressed by a lender, then you might have experience with a lender that you know is going to be able to get a loan through for a buyer for that specific property. So anyway, just a couple of things to consider. Should identifying or not identifying an approved mortgage lender, should you fill it out? Again, it depends on those situations I just addressed. Should it be a make it or break it deal? Again, that depends on the whole totality of the offer that came through, your seller's interaction with the offer. Did the offer come with some sort of pre-approval letter, which we know, I'm not going to touch that with a 10-foot pole, but do you have some sort of assurance that that buyer has even spoken with a lender? Now, we know just an initial interview with the loan originator is not a loan approval by any means, but have they at least taken that first step in the process? So do you have some sort of confidence that they have at least spoken with somebody? How much earnest money did they put in? What's the price range of the house? What are the other terms of the offer? So there is a whole lot to consider when deciding if this is going to be a quote make it or break it issue for a buyer and a seller negotiating a contract. Another point to consider is if a buyer and a seller are negotiating a contract on the RE forms, contract package, there is no place to identify an approved mortgage lender. So this verbiage is only specific to the GAR loan contingency exhibits. So it's not a law or a rule or anything like that in Georgia. It is merely a matter of the contract under which the buyer and seller choose to go binding. But I just wanted to address it just a little bit more about what those paragraphs mean in the GAR, Georgia Association of Realtors, loan contingency exhibits. Thank you guys so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.